purpose of this bootcamp is to go over the must-knows for the Ethics and Professional Practice module of the LLQP curriculum. This session will clarify concepts and address misconceptions to help you develop an ethical professional practice in compliance with the rules governing the life insurance sector. Insurance contracts. In the insurance industry, there are two major divisions of insurance contracts. The first is life insurance, which covers the risk of dying. The second is accident and sickness insurance, which covers the risk of loss of health and provides living benefits. This includes disability insurance, critical illness, accidental death and dismemberment, medical fees, and long-term care. Distribution of insurance products. Insurance companies distribute their products in a few ways. One is through a captive environment, which is a direct relationship between the insurer, the manufacturer, and a single company representative. In this model, the insurer is the principal, and they have an agency or agent relationship. This is also known as single company representation, where you can only do business with one organization. This captive distribution model accounts for about 20% of the marketplace today. The other major distribution channel is through managing general agents or MGAs. An MGA deals with a number of different insurance companies, and these companies give contracts to the MGA. The MGA then extends contracts to independent agents. The MGA provides a tremendous amount of support, including helping you obtain contracts, processing and tracking business, providing sales support, collecting and paying commissions, and offering training. This system is the most common in Canada, with about 60 to 70% of all business written through an MGA. There are also minor distribution channels such as online sales, legal capacity, and minors. To enter into an agreement to sell life insurance or get a contract, an individual must have two things: be of the age of majority and have legal capacity. The age of majority is either 18 or 19, depending on the province. Legal capacity means you are not impaired by drugs or alcohol and can make a clear, objective decision. Minors, people under the age of majority, can be beneficiaries of an insurance contract, but they cannot receive any money directly. Money can only be received once they reach the age of majority, 18 or 19, depending on the province. In Canada, a person 16 years of age or older has the capacity to contract for insurance on themselves, but not on someone else. Parents and court-appointed guardians also have the right to purchase insurance on minors. Power of attorney. There are two main types of powers of attorney, POAs. The first is a power of attorney for personal care, also known as a living will. This grants authority to someone else to make health-related decisions on your behalf if you become incapacitated. The second type, and the one more relevant to the insurance business, is a power of attorney for property. There are two kinds of POAs for property. Limited power of attorney. This ends when the person who gave the POA becomes mentally incapable or after a specific period of time. Enduring power of attorney. This is the one that often appears on the exam. An enduring POA continues even if the person who granted it becomes mentally incapable. A person with a power of attorney cannot do two things for the grantor: change the beneficiary of an insurance policy or make a will on their behalf. Both of these actions are considered a conflict of interest. Marriage and common law spouses. Marriage is a federal act and is considered a legal status. While the celebration of marriage happens under provincial law, the legal perspective is a federal act. It is recommended for married couples to have a prenuptial agreement to deal with property division in the event of a divorce. Common law relationships are a provincial matter, not a federal one, in terms of family property breakdown. The federal government only considers a couple married for income tax purposes if they have been living together in a conjugal relationship for 1 year. The definition of a common law relationship varies by province. For example, in Ontario, it is 3 or more years in a conjugal relationship or having children within that time. In Quebec, common law is not legally recognized. A cohabitation or domestic agreement is similar to a prenuptial agreement for common law couples. Regardless of the relationship, the right to spousal and child support is still present. Child support is a federal matter and is considered law. Spousal support is more of a provincial matter, although the federal government provides guidelines. Divorce, like marriage, is a federal act. However, the division of property is handled by the family law of the province. Divorce allows an individual to remarry. In a divorce, the cash value of life insurance and whole life policies could be subject to evaluation and division. However, the death benefit of a life insurance policy is treated like an inheritance or gift and is not considered family property subject to division. Trusts and trustees. Trusts are useful for tax planning and privacy, as a will is a public document while a trust is private. Property placed in a trust is no longer part of your estate, so it can help avoid probate and protect against creditors and disgruntled heirs. The trustee holds legal title to the property on behalf of the beneficiaries. It is recommended to have a secondary trustee in case the primary one is unavailable. There are two kinds of trusts. Inter vivos trust. This is a trust set up while you are still alive, and you must seed it with some property, even a small amount. Testamentary trust. This is a trust that is set up through your will and only comes into effect the day you die. Bankruptcy. When a person goes bankrupt, a bankruptcy trustee is appointed by the courts. This trustee takes control of the person's assets and affairs to deal with creditors. However, some properties are protected from seizure in bankruptcy, such as life insurance, annuities, and segregated fund policies. This protection applies only when the beneficiaries are a preferred class. The preferred class includes a spouse, children, grandchildren, parents, and legally adopted children. Leaving money to someone outside this class, like a brother or sister, makes the funds vulnerable to creditors. To protect funds left to someone who is not a preferred beneficiary, you can name them an irrevocable beneficiary. However, this comes with restrictions, as you would not be able to change the beneficiary or cancel the policy without their consent. Another important note: any money put into an RRSP within 12 months of declaring bankruptcy can be seized by creditors. Insurance contracts. For an insurance contract to be valid, both parties must have the intention to enter into a binding contract, without coercion or threats. The subject of the contract must be legal. If the contract involves an illegal or illicit act, it is null and void. Both parties must also have the mental capacity to enter into the contract. The offer and acceptance from both parties must be consistent. Public and private insurance programs. In Canada, there are both federal and provincial public insurance programs, as well as private programs. Federal programs include the Canada Pension Plan, CPP, Old Age Security, OAS, Guaranteed Income Supplement, GIS, and Employment Insurance, EI. Provincial programs can include no-fault automobile insurance, workers' compensation, and universal health care. Private programs are what life insurance agents sell, and they are coordinated with public plans. Canada Pension Plan, CPP. This is a mandatory, contributory plan for anyone working in Canada from age 18 onwards. Both the employer and employee contribute. Self-employed individuals contribute both portions. The normal retirement age is 65, but you can start receiving a reduced benefit as early as age 60 or a higher benefit by delaying it until age 70. The benefits are taxable. Old Age Security, OAS. This is a non-contributory plan. To qualify, you must be 65 or older and have been a resident of Canada for a minimum of 10 years after age 18 to receive a partial pension, or 40 years to receive a full pension. You can defer receiving OAS up to age 70 for an increased benefit. A key issue with OAS is the clawback. For every dollar you earn over a certain threshold, your OAS is reduced by 15%. Guaranteed Income Supplement, GIS. If you are a low-income earner, less than $25,000, and are receiving OAS, you may also qualify for GIS. Employment Insurance, EI. This is a mandatory program for working individuals. Both employers and employees contribute. The benefit is 55% of insurable earnings up to a maximum. It is a taxable benefit. EI is a second payer, meaning it is reduced by other earnings. Workers' compensation. This is a provincial program that covers accidents or illnesses that occur on the job. Contributions are paid entirely by the employer. It provides tax-free benefits for loss of income, prescription drugs, medical treatment, and more. Unlike CPP, there are no spousal or children's benefits, universal health care, and drug plans. Most provinces have some form of universal health care and drug plans, administered by the province. Health care is generally consistent across provinces, but drug plans can vary. Legislation and ethical conduct. As an agent, you must be aware of several key laws and regulations. Privacy Act, the PITA. This federal law protects the privacy rights of individuals. Any organization that collects client information must keep it private and secure. Canadian Human Rights Act. This act prohibits discrimination based on gender, religion, skin color, nationality, family status, marital status, sexual orientation, or age. However, insurers are permitted to discriminate by declining coverage if they can justify it on a reasonable basis, such as the individual being in bad health. Criminal code. You must report any suspicious activity related to money laundering or terrorist financing to FINTRAC within 30 days. Other acts that fall under the criminal code include being on the Do Not Call list and anti-spam legislation. Regulatory authorities. You will report to provincial or territorial authorities. The Canadian Council of Insurance Regulators, CCIR, works to create consistency in rules across Canada. The Canadian Life and Health Insurance Association, CLHIA, is a lobbying and research group for insurance companies. Ombuds Service for Life and Health Insurance, OLHI, is a free service that handles complaints when an insurance company denies a claim. The core ethical values for an agent are acting in good faith, having a duty of care to do what is best for your client, and not putting yourself in a position of conflict. Competence, keeping up with industry knowledge and continuously learning. Integrity, being honest, trustworthy, and dependable. Managing conflict of interest, disclosing potential conflicts to the client. Proper disclosure, being honest about who you are, the companies you represent, and what the product does and does not do. Handling complaints, addressing client complaints in a timely manner. Unfair and deceitful practices. Practices to be avoided include premium rebating, giving a client a portion of the premium to entice them to buy a product, twisting and churning, replacing a policy with another from a different company, twisting, or the same company, churning. This is not illegal, but it requires full disclosure to the client using a life insurance replacement declaration, LIRD, form. Trafficking in insurance. Buying an existing insurance policy from a client. This is illegal in some provinces. Fronting. Submitting an application through your contract for someone who is not licensed. Misrepresentation. Misrepresenting the product or the company. Forgery. Signing a document on behalf of a client. This is a criminal offense. Commission sharing. Splitting a commission with an unlicensed person. Sharing commissions with another licensed person is fine. Defamation. Slandering or defaming the character of an individual or company. Additional licenses and designations. Your life license does not allow you to sell property and casualty insurance, e.g., car and homeowners insurance. You also need separate licenses to trade in securities or to be a mortgage broker. However, you do not need a license to act as a deposit broker for a bank or to be a financial planner. A financial planner is a designation, not a license.